Good morning, everyone, ladies and gentlemen, dear friends of BRS, the Belgian Raiffeisen Foundation. I wish you all a warm welcome to this edition number 14 of the Microfinance Lunch Break. Here we are again, and these microfinance lunch breaks continue to be a landmark in the Belgian financial and economical circles. As you know, the aim of the microfinance lunch breaks is to raise the awareness and to increase the interest for the challenging world of microfinance and microinsurance. BRS is convinced that with ADA, Febelfin, Assuralia, KBC and SERA, it has strong partners who are convinced of the important role microfinance and microinsurance play and have to play in the future. They all are willing to support this initiative very actively. I especially would like to thank KBC, our valued structural partner of BRS, for their support and generous hospitality for our microfinance lunch breaks. We kicked off the first edition of this microfinance lunch break in February 2009. And since then, through a number of well-known and experienced speakers in review, we discussed a variety of issues of the world of microfinance and microinsurance. And so we are here again today with a new and undoubtedly daring question. Islamic microfinance, a solution to expand financial inclusion? The global Muslim population counts about 1.6 billion people, but over 70% of them do not use formal financial services. Islamic microfinance accounts for less than 0.5% of global microfinance, according to the 2008 Consultative Group to Assist the Poor CGAP survey. Islamic financing is unique and essentially different from conventional microfinance. The sector seeks to provide an economic empowerment tool for poor or disadvantaged people based on Islamic financing methods that avoid interest, which can seem impossible, but therefore the sector focuses on profit and loss sharing. The specialists invited to the 14 microfinance lunch break are Dr. Mohamed Krousin and Mrs. Fadoua Boudiba. Mrs. Fadoua Boudiba is Senior Investment Officer for Middle East and Africa with Triodos, one of the world's leading banks and investment managers headquartered in the Netherlands. Dr. Mohamed Krousin is head of the Global Islamic Microfinance Business Unit at Islamic Review Worldwide, an independent humanitarian and development organization with headquarters in Birmingham, UK. Mr. Krousin completed his PhD on the political economy of Islam. He is a development economist with over 15 years' experience of working with Islamic development and financial institutions. Our panelists today will discuss about the development and the contribution of the Islamic microfinance to the financial inclusion. They will explain the main principles of the Islamic microfinance, as well as challenges it copes with today and the opportunities of its expansion. They will also explain how the sector adapts the social performance standards, women empowerment, and rural development. Mr. David Demelier, who is currently a senior project manager with the French Public Financial Institution, will moderate the discussion. From April 2013 to August 2016, David was seconded to the European Investment Bank as Business Development Officer for the Middle East and North Africa region. So, dear ladies and gentlemen, once again we have a challenging subject and renowned panelists. Together with you, I'm looking forward to an undoubtedly fascinating discussion, and after the presentation, there will be opportunities for questions and answers, followed by some closing remarks. I'm now very happy to give the floor to Fadoua, Mohamed, and David, but before, Kurt Moors will introduce us to the subject with a video. Kurt, the floor is yours.
Yes, good afternoon. Welcome at this microfinance lunch break on Islamic microfinance. Yes, the debate, they were so eager to start, but I asked them just to wait a little bit, because I think before going into this debate, to give you a kind of a flavor of what is about Islamic microfinance. So we show you a small video of 5 minutes of an organization in Pakistan. It's the Wasil Foundation, and this will give you in 5 minutes already an idea about what we are going to debate.
Pakistan is an agriculture country. The poverty level is very, very high. To alleviate poverty from the country, we have to focus on the micro farmers. Some of the farmers are very religious. They will not opt for interest-based lending.
So in 2009, Wasil Foundation began offering farmers in Punjab Sharia-compliant financing.
We are in Morkunda. This is a very rich agricultural area. The client we are going to right now, his name is Khizr Hayat. He was the first ever client who ever got Salam. Salam is basically an advanced purchase in which we determine the price, the quantity and the quality at the very start of the contract. Islam encourages trading. We're engaging in trade rather than lending, rather than charitableness.
These farmers were not able to reach to the banks. They were going to middlemen. The middlemen used to provide them all inputs on credit.
Khizr Hayat used the cash to buy fertilizer and seed in June when prices were low.
He's saying that the harvest this year is very good and he is quite content with that.
His wife and kids help dry the wheat. The agreed portion goes to Wasil, and any surplus will be sold on the open market.
We store it in a warehouse and then sell it to flour mill. We have better negotiation powers to sell it in the better rate.
He was an early adopter. He saw the good that this can bring. Actually helped him to plant more crop and get more yield.
The increase in his wheat yield means that he's been able to rent more land. He also bought 2 buffalo, a plough and this new tractor and thresher.
ਕਾਰੋਬਾਰ ਚੱਲ ਗਿਆ ਉਹਦੇ ਵਿੱਚ ਸਾਡੀ ਤਾਂ ਜ਼ਿੰਦਗੀ ਵਿੱਚ ਇਜ਼ਾਫਾ ਹੀ ਹੋਇਆ
And all that has had a big impact at home.
Before, he had a small house over there, and then after taking financing, he built this house.
Unlike Khizr and his wife, 2 of their sons and 3 daughters have been able to stay in school.
Over these 5 years, we have seen a rapid exponential increase out of poverty of this one client of ours. We're going to Sharakpur right now. This is a guava-rich area. We have dispersed an HRA financing. We take a piece of land on rent and then we sub-rent it to our farmers. And the farmers can either pay in cash or they can pay in the form of crop.
Muhammad Rizwan got himself into debt and ended up working 2 years as a day labourer to pay it off.
Alhamdulillah पाक दा बड़ा शुक्र है कि हुण मेरे कोल कोई 2-4-10 मजदूर ने जी.
He had the experience of picking, but he did not have any capital in order to get an output of his own. So we got him 7 acres of land. We planted guava in his field. He picks the fruit. He sells them to the open market in Lahore, in Karachi, Islamabad, all the major cities of Pakistan. Within a period of 1 year, he made a profit of 650,000 rupees, which is an exponential profit.
ਅੱਜ ਮੈਂ ਠੇਕੇ ਲਈਏ ਖੁਦਾ ਮੇਰੀ ਮਦਦ ਕਰੇ ਹੋ ਸਕਦਾ ਮੈਂ ਆਉਣ ਵਾਲੇ ਵਕਤ 'ਚ ਮੁੱਲ ਖਰੀਦ ਲਾਂ.
Muhammad is now on his 3rd cycle of financing. He's used a portion of the income he's made to make improvements to his parents' family home.
ਉਹਦੇ ਤੋਂ ਫਿਰ ਪ੍ਰੋਫਿਟ ਤੋਂ ਪ੍ਰੋਫਿਟ ਜਿਸ ਵੇਲੇ ਮੈਨੂੰ ਫਿਰ ਬਾਗ 'ਚ ਮੈਂ ਫ੍ਰਿਜ ਲਿਆ ਫਿਰ ਇੱਕ ਟੈਲੀਵਿਜ਼ਨ ਲਿਆ.
That's his mother. Out of the yield of the next crop, he plans to build 2 more rooms on top of this for the other 2 brothers who are getting married.
And now Muhammad is planning his own marriage.
The lives of these people have not changed over hundreds of years. But alhamdulillah, we have seen radical changes within 1.5 years.
There is a rapid jump. Their income is almost doubled.
Wasil's latest offering is Master Salam, a contract that combines the Jarrah and Salam so that farmers can rent land and have cash in hand to buy fertiliser and seed. With this innovation, they hope to go much further in meeting the needs of smallholder farmers.
We need to scale up. We have 50,000 clients who are ready to take financing from us. But unfortunately, we don't have enough funds to finance all of those people.
I want this product to be in whole of Pakistan. It will be a role model not only for Pakistan but for other countries as well.
Thank you, Kurt, for this video. We received a lot of questions from the audience, and thank you for sharing. We hope we will try to do our best to answer to all these questions during our discussion, but after, you will have, I think, the possibility to ask one or two more questions that you think would be interesting. So let's get started, and let me begin by asking a first question to Mohammed. It's a general question about the market, Islamic microfinance market. Microfinance is growing very quickly throughout the world. How can Islamic microfinance contribute to these developments?
Thank you, David. What's left to be said, obviously, you had a fantastic introductory speech by Frankie. We've watched microfinance, Islamic microfinance, the movie already. So I think for us it's just to kind of put a few things together for you and for your benefit. Of course, Islamic microfinance is a new, if you like, sector. However, it's also not a very new sector because a lot of things that you've now seen, for example, in the case study in Pakistan, of course, these are very traditional financing methods that are actually going back for hundreds of years. What we see now really with this kind of new Islamic finance industry that Fadwa and myself will be talking about today with you, really is that it's, if you like, a convergence, a coming together of Islamic finance, an industry now that has about 1.5 to 2 trillion US dollars of assets under management, and that's growing at about 15 to 20% a year. So it's quite a sizable market now, coming together with financial inclusion. And that's really where, if you like, what microfinance, Islamic microfinance is in a nutshell. We've already heard, of course, that the need for financial inclusion is massive. Muslim majority countries, we see that bankability rates are usually, of the adult population, are usually, in sub-Saharan Africa, for example, 10 to 15%. We can take Kenya out of that for a second, because of course we got the mobile banking revolution there. We can look at the Middle East, the MENA region, we have slightly better bankability rates. But also the Findex, for example, for South Asia, also maybe shows 20, 25% of the adult population actually using formal finance. Now, that's a massive problem from a development perspective. Of course, we know, and we all share, of course, that passion and the mission for microfinance as a tool for economic development and growth. And we see that as a massive a need. And bringing in a tool that allows people to benefit, and we will talk a little bit later, I think, about how exactly the Islamic finance proposition works, is of course something that is very important to bring people into the formal sector, because of course there are very clear-cut economic benefits for that, but also doing that in such a way that we can also do that in a way that it corresponds to people's ethical beliefs. And of course, I think we're sitting in a bank with a very long cooperative tradition, obviously. So we all believe that's a good bank. But of course, in 2008 we had the massive global financial crisis. Of course, we realized perhaps that not all banks are good banks. And I think a lot of us actually started thinking about, if you like, the banking business model, taking from the very poor, trying to overburden them with finance. And of course, we found out that that's not a very sustainable model. So what we show you today, I think, is a slightly different value proposition and also a slightly different business model.
If I understand, you said that there is a market niche. So I think it's a real opportunity to invest in. What do you think about that, Fadwa, as an senior investment manager?
There is obviously a potential. Thank you for the question. There is a potential on Islamic microfinance today. The Islamic microfinance outreach represent about a little bit more than 1% of the total outreach in the conventional microfinance. We are talking about more than 700 million potential clients. But more than figures, as a social impact investors, those people are double excluded. So they are poor, and we are coming with conventional tools that are not in line with their belief. So they are double excluded because they are poor and they are Muslims. And within the Muslims, you have maybe 2/3. It's very difficult to assess, but from the Muslim community, a portion of them will absolutely reject any conventional tool. And this is an important market niche to take into account, because we cannot claim, in my view, that we are bringing same conventional. We try to be different than the banking by bringing the conventional microfinance. But from the conventional microfinance, there is another market niche that is important to look at it. And I'm not saying that we have to bring product à la carte and to all the ethics and methodology, but clearly, the way, for instance, the project that we have seen with the Salem product, you are not only just providing a product, but you're helping the value chains. It's a different way of doing the microfinance. And you absolutely, as you mentioned, David and Mohammed, it does exist from before. It's just a way maybe to standardize, to define certain way of doing it. You can call it Islamic, you can call it ethical. It doesn't have to be only for Muslims. We'll talk a little bit more in depth that those type of projects could be for Muslim and non-Muslim. But yes, there is a market niche. And today, for the constraints that we will discuss during the debate, we have not reached really and respond to the answer of those micro-entrepreneurs. So as a social investor, I think it's important to look at this market niche and try to see how can we work together and increase the outreach.
Thank you, Fadwa. Before giving an introduction to the Islamic finance tools or instruments, just a question that comes up during your debate. It's about the target of the Muslim. You talked about Muslim people, Muslim population. Do you think that Islamic microfinance could be also a product to be given to other population?
Absolutely.
And why? Yes.
There is different type of product. We talk about in Islamic microfinance, the most developed product is Murabha. Which is a product, is a cost plus a markup. So basically, maybe you can explain it a little bit more because it's a product that is dear to him,
yes.
But it's a product that is linked to an asset. So I have seen in Palestine, clients that are Christian that prefer to have, instead of having cash, through a loan, would like to have assets. So you don't need to be Muslim or non-Muslim. You can, in Pakistan, I have seen different religion using different type of product. So it doesn't have to be linked. In some country they prefer to call it ethical. You don't have to, label it as a Muslim, but it's just a different way of doing the microfinance.
Yes, thank you, Fadwa. I think we will talk about interest rates and also riba with Mohammed a bit later. Now, what are the principles that Islamic microfinance has to follow from Islamic finance? Mohammed, please.
you know, as we said,
As through the ball, yes.
as we said, of course, in many ways, of course, you know, it's the coming together, if you like, of those two strands of Islamic finance, and we're talking about a number of products, and we will use different types of, if you like, Arabic terminology that is prevalent in the sector, but we will always try to give you the English or French or otherwise translation of it. But the main areas where the value proposition of Islamic finance really, and very often when I speak to Islamic bankers, they say, well, look, what you guys, the microfinance people like myself and all of you are doing, that's really what Islamic finance should all be about, okay? Because we see, you know, when I talked about the 1.5 to 2 trillion US dollars of assets under management, now that's really primarily capital markets and investment banking, okay? Now, Islamic finance hasn't really penetrated the retail market. And particularly, of course, where it's working in retail banking, of course, it's primarily working with affluent for housing finance or car finance, etc., etc. Islamic microfinance, however, is, of course, really about bringing those, and we're sort of arguing a little bit about the exact number, because CGAP has done a survey that's now nearly 10 years old, so we don't know exactly how many millions, but, you know, we can probably very safely talk about 200 or 300 million Muslim and also non-Muslim consumers, obviously, who are currently excluded on the basis of both the availability and also, of course, perhaps self-exclusion because they choose not to deal with interest. And why is that value proposition appealing? Well, what's the value proposition, first of all about? Really, it's encapsulated really in 2 or 3 big issues. One is, of course, that there is no such thing as the intrinsic value of money. Money in Islamic economic thinking, if you like, is really just a store of money, okay? I cannot give it to Fatwa and then ask for a rent on top of the money that the principal that she owes me. We really see it just as a store of value, okay? And we see, therefore, that value creation has to be done through economic activity, okay? So you cannot sit idle and draw revenue from this money, okay? So that's one big principle. And all the Islamic finance instruments that we're also using, both the Islamic banking industry and the microfinance industry you're using, are driven by that principle, okay? There has to be real value creation, and money has no intrinsic value, okay? Yes. Secondly, and therefore, of course, on the basis, of course, interest, also in Arabic called riba, is forbidden, okay? And therefore, we have to find new innovative ways, and some of these new innovative ways, as I said, they're already hundreds of years old, because, of course, the Muslim world has developed, and the Muslim world, you know, historically, of course, was a trading world. So trading relations all over, you know, between the Arabian world, across the Arabian Sea to India and Indonesia, of course, but very, very critical. Thank you. So riba is something that's forbidden. Therefore, we have trade-based instruments. Okay, we have, you know, of course, financing, short-term or long-term agriculture financing instruments like the Salam product that you've seen, and then, of course, also the prohibition of excessive, if you like, uncertainty or risk-taking. Okay, so we shouldn't really involve ourselves in speculation. Okay, it really has to be down to real economic activity and growth. And that's really what drives both the Islamic finance and banking industry and the microfinance industry.
Thank you. Thank you, Mohamed. What about partnership, and what about profit and loss sharing? Maybe, Fadwa, you would like to add something on that?
So
I think it's
one of
more
the
cultural.
core
Yes.
and for me the core element here, it's really, you see the microfinance, Islamic microfinance from a different perspective. You become partner, is a risk share instrument. So you are both in this association. You lose together or you win together. It's a different relationship than having a debtor, a lender and borrower. It's a totally different aspect. So we try to work together in order to be successful. So through the Salam, as you have seen, for instance, The microfinance institution, it's really involved through the process until the micro-entrepreneurs sell the crops in the market. So it's not just, I'm a lender, I'm just providing you money, and you are borrowing, and after X months, then I check if you are using the money for the right purpose, as we see in the conventional. And then if you're late, you have to repay penalty fees and so on. It's totally different. So you try really to be there from the beginning until the end, drive the business model, check with them, the amounts are different, the tenor is different than the conventional. Is really, you have to think outside the box. And I think this is, for me, really is a partnership. It's like a marriage. Sometimes you can divorce, but still is a marriage. You try to be successful together, and if you fail together, and if you succeed together. So. Yeah.
Thank you. Mohamed, would you like to add something on partnership and profit and loss sharing?
Yeah, I think this is, this is one of the beautiful aspects, if you like, of, especially at the micro level, obviously, of Islamic finance, because, very often it's also called participatory finance. I think the whole, Islamic banking sector in Turkey is called participatory finance, because it's really about avoiding. Because the understanding within Islamic economics is really that, of course, the function of the economy is social benefit and the social good, rather than the enrichment of a small number of people. And therefore, of course, there cannot be any guaranteed returns, so we don't have interest-bearing instruments, okay? And any kind of economic activity, all partners have to be exposed to risk. And therefore, we have a number of partnership-based instruments. And of course, very often, we're also asked, of course, well, how does it work? How can you make an economy work, or how can you make a financial institution work when, there is only risk and no interest? It is a different value proposition, of course, that underpins a different business model. But what we've seen, for example, in the case of the Salam product that the little video showed to you, is, of course, that even a microfinance institution, of course, is exposed there to market risk because, of course, the grain price might vary. So it is really a partnership with the poor. And that's really what, if you like, the old idea of Muhammad Yunus was all about, really, a partnership with the poor, a village bank that is actually there for the benefit of everybody, not just for the benefit of a small number of people.
Thank you, Mohamed. That gives me the opportunity to ask you another question. Maybe Fadwa would be able also to answer. It's about the importance of making profit for an Islamic microfinance institution organization. You are talking about a business model. What is a business model of an Islamic microfinance institution?
Well, the basic business model is, of course, the objective of we're also talking about Sharia compliant, and Sharia is a little bit of a difficult word at the moment, okay? But Sharia really is, the original, and it's a beautiful word actually in Arabic because it's actually if you translate it, is the path to the watering hole, okay? So it's that way that leads you to the good, okay? And we know there's lots of negative connotations with this word at the moment, yes? But the original Arabic meaning is really the path to the watering hole, okay? What we really want to do in financing is really generate social benefits first and foremost, okay? And the social benefits are, of course, created through generation of wealth. So even if you have an Islamic financial institution that plays a similar role, if you like, in terms of financial intermediation as a conventional financial institution. So we have, on one side, we have depositors, and on the other side, we have entrepreneurs who are looking for money, and the depositors looking for a return. The financial institution in Islam, of course, has to make sure that this return fulfills the ethical proposition. So all the principles that we talked about before, no guaranteed return, risk sharing, no interest, no excessive, no gambling and speculation. So financial institutions in Islamic finance, of course, have shareholders that are also looking, apart from the social return, also for financial returns. And that can be generated either by interacting in trade-based products. Salam might be one of them, or we talked about Murabaha, which is a cost-plus a sale, okay, or really entering into participatory financing arrangements by becoming partners with a poor entrepreneur and his or her business. And of course, that allows the financial institution both to be much more involved in terms of a business development side of things, which is also important for microfinance, obviously, but also, of course, to benefit from the profit that entrepreneurs can create.
Absolutely.
Yes, Fadwa, what is your point of view on that?
Yeah, no, absolutely. I totally agree with you. It's not because you're an Islamic microfinance institution that you cannot be profitable. This is really a misconception. This is not for charity. There are charity tools that are available. However, it's just a little bit different. Good microfinance institution in conventional and is Islamic has to be sustainable. Good practice in conventional, good governance, good risk management, good product has to be exactly the same. You can make profit in Islamic microfinance, but it doesn't have to be excessive. We don't want to end like many microfinance institutions in certain countries that are almost, becoming more than they are listed in the stock exchange market. So there is a limit, there is some fairness in the Islamic Sharia methodology and ideology that you can make profit, but it has to be reasonable. Right, but nothing prevents an institution to be sustainable, and yeah, it doesn't have to be all for charity. We have, as I say, charity tool, but this is two different aspects.
Yes, we will have some differences with conventional microfinance, just like maybe the Sharia board. Do you want to explain maybe a lot about the role about Sharia board in microfinance, Islamic microfinance?
Yeah, I mean, obviously, the issue with Sharia boards and governance, of course, is that when we make, if you like, or offer this kind of ethical value proposition to both investors and clients, of course, we have also a duty to ensure that this ethical value proposition is also true to its promise. And therefore, of course, Islamic financial institutions have to really have a dual governance arrangement, okay? One, of course, is very, very, very similar or the same, of course, to the corporate governance arrangements that financial institutions have all over the world. In addition to that, of course, we also have what David referred to as the Sharia governance board or supervisory board to ensure that the products that are offered, that they are compliant with the ethical value propositions, no interest being taken, no guaranteed returns, no excessive risks, etc., etc. And also, of course, that the overall processes, the way that we deal with clients, that they also fulfill the ethical value proposition. So that's an added dimension to Islamic finance and microfinance. And obviously, it provides that level of assurance, as I said, both to investors and also to consumers.
Mm-hmm. Thank you.
And one point related to the Sharia board, it's in practice in the microfinance sector. You saw the case of Wasil Foundation. Wasil Foundation was a conventional microfinance institution that converted into Islamic microfinance with all the challenges linked to that, because it's, you train a loan officer in a certain way to do conventional and then suddenly you switch it to Islamic. It's a totally different methodology. And one of the challenges was to find a Sharia board that will understand the Islamic finance, but also the microfinance and how it's linked and how to approve and so on. So this is a new way of thinking, not only from a microfinance perspective, but also for the Islamic finance industry. So how they manage, they have an external Sharia board that give an approval for several Islamic microfinance institutions because it was costly and because at the beginning you have to train the people. So this is one of the examples that you can have as an additional layer of control, as you say.
Mm-hmm. Thank you. At the stage of the discussion, would you like maybe to describe briefly an instrument that is usually used by Islamic microfinance institutions?
Okay, so we have the Salam. So what is a Salam? Salam is a purchase agreement of a future delivery of a crop, for instance. right? So basically what happened, the microfinance institution will pay an amount. We discuss first with the micro-entrepreneurs on how much, for example, they used to collect on, let's imagine, cotton. It was not the case of cotton, but in Pakistan you have it. Then you agree on a certain price. You agree on a certain quantity. You agree at the time of the delivery. So the microfinance institution provides the financing to the micro-entrepreneur. The micro-entrepreneur is free to buy the seed, the fertilizer, and so on. After the harvest season, and they will repay, the micro-entrepreneur will repay the microfinance institution with the crop. So at the time of the harvest season, where usually the price is lower, the microfinance institution collect the crop, store it in a warehouse, based on the price that was agreed, on the quality that was agreed, and so on. Store it, and then they will sell it on the market. And the micro-entrepreneur remains with the portion of the crops. And this is a total different way of doing the microfinance in comparison to the conventional. There is a little bit of important aspect here. Sometimes the harvest is not that good, right? You cannot, then we have in place some insurance, microinsurance with takaful, to protect both the micro-entrepreneur and the microfinance institution. Sometimes, the micro-entrepreneurs feels that he can sell to the higher price in the market. So the microfinance institution could cap, for instance, in the case of Wasil Foundation, kept 30% of the profit, above 30%, then they share it with, in addition to what was agreed, an addition profit for the micro-entrepreneurs. This is a way. And if the micro-entrepreneurs doesn't have a land, so you enter into two types of contract. One, sell them with the crop, and another one where the micro-entrepreneur lends the rent to the microfinance institution. So this is another way of one of the tools, for instance, and it's mainly in agriculture that we use the Salam.
Thank you, Fadwa. Mohamed.
Yes, just to add to what Fadwa was saying, obviously, and you mentioned this early on, obviously, the whole idea of the value chain management, which of course is absolutely critical, because it's both in the interest of the farmer or the entrepreneur and the microfinance institution, obviously, that those crops that you can maximize, of course, the value that we can get out of those crops. Another very interesting, and therefore, of course, purchasing power and group purchasing power that the MFI will be using at the end of the period when they are going to sell the grain or the crops is really critical. Another important tool, and that's really dominating the Islamic microfinance and also the Islamic banking industry, is murabaha, which is a cost plus sale, okay? Really, there, the microfinance institution or the Islamic bank purchases a pre-specified item. It could be a tractor, it could be a cow. We argued about cows yesterday, whether we can do it, but yes, we can sell a cow on murabaha. So we purchase this on behalf of for an entrepreneur or a farmer, okay? In that discussion at purchasing, we're saying, and we will charge you, for us going out to the marketplace to purchase that cow, we will charge you an extra 10%. Yeah? We might also use our group purchasing power because we buy 100 cows or 1,000 cows, okay? So we are generating an extra margin on top of the original price, but we're declaring this margin. So it's very important that this is a very transparent product. We're declaring this margin to the entrepreneur, to the farmer, okay, and he and she will have to agree with it, okay? And then we're delivering this asset to the client, and he or she then can pay over a certain period of time, pay back, of course, the original price of the asset plus the margin. Now you might think, oh, wait, that looks a lot like interest, really. A cow costs $100. I go to the market, I buy it, I put it on the back of my shoulder on my moped, I deliver it to those people of you who have been really in microfinance, on the dirt tracks in the villages and whatever. You see these guys, yes? If you ever see someone with a cow over their shoulder, that's someone who's just selling a cow on murabaha to a farmer. But of course, the microfinance institution, until the cow is delivered and taken by the client, of course, takes the risk, of course. So there's a very clear risk that the microfinance institution takes. And this is really now for the bankers, really, or the accountants. There's also a slight philosophical difference, I suppose, in terms of if we look at the international financial reporting standards and the discussion of form over substance. Of course, the FRS really are saying that substance is more important than form. Okay. In Islamic finance, we're actually looking at it from a different perspective. Okay. So the murabaha, whilst it looks $100 in, $110 out, 10% interest. Okay, that's what the transaction looks like. The Islamic finance perspective, of course, is that it's a sales transaction. I have to go to the marketplace, I take Fatwa with me, she decides which cow she wants. I have to then deliver it to her and effectively sell it to her. I create a debt through that transaction, obviously, because I allow her then to pay me back over maybe 12 months in equal installments. But in form, it is a sales contract, and it's not actually an interest-bearing loan. So that's really the difference. That's a very popular model. It has some problems, which we can talk later on, maybe offline about. But it's a very popular model, and it really requires you to look at it, as I said, through the form over substance lens that Islamic finance uses here.
Thank you, Mohamed, for this example. Now, in which countries is Islamic microfinance currently available or implemented?
Well, Islamic Relief, we work in 12 different countries. So we do work in West Africa, Mali and Niger and Chad, more in the center of Africa. We do work also in Kenya with Islamic microfinance and Sudan. Sudan is a very big market for Islamic microfinance. That's primarily to do with the government having decreed a number of years ago to, if you like, convert the whole banking industry onto an Islamic footing. Islamic microfinance is also very popular in Pakistan, one of the market leaders, Bangladesh, Indonesia, and also in some other countries. We also work in Europe. So we do have Islamic microfinance institutions, for example, in Bosnia and also in Kosovo. Central Asia is also a growing market for Islamic microfinance, and I think from an investor perspective, I think we would like to hear from Fatwa a little bit where she thinks are the new opportunities, maybe.
Yes. Everywhere. No, absolutely. As you mentioned, about 70 to 80% of the Islamic microfinance now is concentrated in Sudan, Pakistan, Bangladesh, and Indonesia. However, I used to work in the CIS region, ex-Soviet Union countries, and over there you see many, many people interested by the Islamic microfinance. With the end of the Soviet Union country, most of the country over there are Muslim country, and you see some clients, there is a demand. There is a new legislation in Tajikistan, for instance, regulation on Islamic microfinance. One was about to get voted in Azerbaijan before the devaluation last year. So there is a lot of change even in this market, without talking about Africa. In the MENA region, where I work a lot, you see most of the microfinance institutions starting to develop products. They don't want to convert a full conventional into an Islamic. Some does. Some institutions are willing to do it, but some of them just want to open a window or develop a new product or do a micro equity product that is a little bit different. In Tunisia, I remember the IFC just launched a new product on micro equity with the cow and then on cooperation, and they used to go for the milk and help the micro entrepreneur through BDS product to scale up, to develop new skills. And you have seen that. I have seen that in many different countries, even in the MENA region. So yeah, there is a demand on I think in the market. Yeah.
Thank you, Fadwa. Thank you, Mohamed. Maybe Kurt, you would like to add another question.
Yes, we received a lot of questions. We tried to talk about them as much as possible. Some of them were very easy to answer to the people directly, like, can we park our car here beneath? So that's unfortunately not possible for everybody. But before, I would like to know, are there some burning questions? Then I propose, looking to the time, that we take another 1 or 2 questions directly from the audience. Yep. Somebody else? Okay.
My name is Yasser. I'm working on microfinance, but from technology point of view, we provide digital solutions. I just came actually from Nairobi, where we had an Islamic forum on microfinance. So I have one comment and one question. The comment actually is regarding the product that microfinance provide. We've seen, obviously, as you say, that most, at least in East Africa, that some banks do provide some microfinance, Islamic microfinance product, while remaining as a traditional banks. And there we've seen there are some challenges because of the regulation and as well for the Sharia compliancy. There are extra costs because they have to buy additional software that are Sharia compliant, so they are duplicating the process on themselves. And that's one of the challenges. The second challenge, and I think where my question comes on, it's on the regulation part. Most of the countries where Islamic microfinance is working, at least in Africa, there are no regulators. They don't have any rules on Islamic product. And so it's very difficult for them to provide an Islamic product while they have to report to the central banks. It's a little bit difficult because, as you said, in normal banks there are liabilities, everything is interest-based there, since it's investment, so there are some things. So I want to have your point of view on how the challenges for this Islamic product, how they can face these regulation issues to move on and to get a large outreach. Thank you very much.
I propose to have the second question too, and then we can answer them at the same time.
Thank you for this beautiful and interesting meeting here at the KBC Auditorium. I'm Dr. Thierry de Groot. I'm cardiologist, and I spent 3 years in Cameroon, Africa. So I know very good the problem, because when you are a doctor, you see rich men and poor men. In your film, we have seen men and women. In Cameroon, almost only the woman works and the man rests. It's a reality of there. And secondly, in Cameroon there is 70% who are Christian and 30% of Muslim. There also are 70% who speak French and 30 English. And I ask me, why only Muslim? And its country is not possible. You have to do all people. And last one, there are also spend meeting to épargne, sorry for the name, and all the people who are into group pay an amount each month. And each month there is a man or a woman who have all the amount. I think it's also a form of microfinance.
Okay, thank you.
No, I didn't get it. Yeah. Mohamed, maybe you would like to answer the first question?
Yes, Yasser. Obviously, it's a very tricky issue because you're talking about obviously about window operations, and of course, window operations have to segregate their whole delivery channels, the whole accounts. They also have to segregate money, so it does require, of course, a very sophisticated system, including softwares. The problem with regulators is, of course, that very often they don't, if you like, have two sets of regulations for Islamic and conventional microfinance institutions. Some regulators, I'm from the UK. The UK wants to be really a non-Muslim country hub for Islamic finance. So a number of prime ministers and chancellors of the Exchequer have actually, and Gordon Brown almost 10 years ago started with this in the UK, to set up a legislative and a regulatory framework to allow Islamic finance to operate in an economy that's not Islamic. Because it does require an Islamic bank, of course, because it doesn't, as you said, it doesn't actually record liabilities in the same way. It doesn't also make sense, perhaps, from a reserve perspective, because we're not actually lending money. Okay, so it does require a different risk management approach. Very often, regulators in Muslim majority countries, if you like, don't recognize Islamic finance. Okay. So you think about Islam, you think about Saudi Arabia. But Saudi Arabia, for example, doesn't recognize Islamic finance, okay? Now, it's a big problem for Islamic bankers because, it doesn't give them guidance to operate. I'm sitting on the board of a microfinance institution in Bosnia, for example, and Bosnia has a large Muslim population. The regulator there doesn't recognize Islamic finance products. So our products, whilst we, of course, doing our best through the Sharia governance processes that Fadwa described, working with clients to make them understand that we are having and offering authentic Islamic ethical products, the regulator doesn't want to know anything about that. The regulator only wants to know how much interest you're charging. So it's a real headache for us, and we're working very closely with regulators to ensure that they educate themselves and also see this as a market development. Kenya is very interesting because Kenya, the finance ministry has just decided that they really want to promote Islamic finance. So that's a regulator really taking action and being innovative and opening up, in the same way that the UK has done it, and the UK has done really well in terms of European banking for Islamic finance. So I think it needs really proactive, all-embracing regulators to make that happen.
Thank you, Mohamed. For the second question, I think it was something related to the markets, Muslim, non-Muslim.
But
yes, sorry.
Yeah. He has another question in his question, yes.
Fadwa, yes.
Yeah, sorry. About this transformation. I think the first question when you have a conventional or an institution that would like to work in Islamic microfinance is to ask, okay, how is the population, what they can accept or not? Because I have seen many microfinance institutions, like in Pakistan, for instance, having a window doesn't work. It doesn't work because they find that you are just playing around, and you are labeled as a conventional Islamic microfinance, conventional microfinance institution. So if you are selling or opening a window, it doesn't work. The client doesn't feel comfortable. This is in Pakistan. So that's why, for instance, Wasil Foundation, they totally changed. They start to have a window, and it was a total failure. So they convert all the branch from conventional into Islamic microfinance. But I know that, for instance, in Tajikistan, if you open a full Islamic microfinance, people might be reluctant. So they have started to open with a window or special branch with loan officer, or in this case you call them financial officer, really dedicated to this type of product. Because as you have seen, it's a total different methodology and approach. So I think the first question is really to understand how is the market, how can you approach the need of the client, if there is a need? How can you tackle that? Do you want to have a window, separate branch, full-fledged Islamic microfinance? And I think this is the first question. And of course, the regulation, it's always a headache. In some countries that are doing conventional, they still don't have, I just came back from Lebanon, they don't have a regulation in conventional microfinance, but are still working and operating and so on. So yeah, it's a long way to go, but that's the way it is. And it's one of the challenges to have a good regulation.
So David, if I've well understood, so the first question was related clearly to the variety of religions, and then to come with one model, and if that was possible. I think it's already partially discussed here. And the second one, if I've well understood, it was people combining money and then some person using that money, if this is not also a kind of microfinance system or Islamic microfinance. Yeah.
Yeah, I think, Islam and Muslim countries and Muslim communities have a very long tradition of cooperative finance. So that's really, if you like, something that is, within those kind of dimensions that Islamic economics defines as ethical. So, there shouldn't be any speculation with that money. There shouldn't be any guaranteed returns. But the idea of pooling money and working as a cooperative is really something very important and really, totally Islamic, if you like. Okay, so, you can all relax, if you work in a cooperative bank. You're nearly there. Obviously, just on the issue of, the value proposition, Islamic Relief, we offer Islamic microfinance also to non-Muslims, just to clarify that as well, because there are clients out there that actually like the idea of not having a debt burden over their head, and they would much rather like either to share the risk with us and the profits, okay, or, to do an asset sale with us. So there are actually, I think, benefits beyond the label. And I think hopefully today we've been able to kind of lift, if you like, that veil, away from Islamic finance to give you some insights into the ethical foundations and the value proposition that Islamic finance offers. And that's universal, really. Whether you are a Muslim or a Christian or a Hindu, I think there's something that is there, to be benefited from. And I think, just a statistic, I think in Malaysia, the vast majority, or over 50% of Islamic banking customers are actually not from the Malay Muslim community, but they come from the Chinese community. There is benefits from, in there for them, and they take advantage of those.
It's a very nice final message.
Yeah, agree.
Yes.
Padua?
No, absolutely. I totally agree with Mohammed. And on the ground, you see a lot of. I took the example of Palestine. In one village, all the Christians, they use murabaha because they lack really the assets aspect. They don't want to have a credit. They don't like it. They don't like the ID. So, why not? And in some country, they don't want to label it as Islamic. They want to call it ethical. Do it. I mean, why not? Why do we have to put some, rules and limits? It could be profitable for everyone, not only Muslims.
Thank you. Kurt?
Yes, there is one question I leave to Marek Labi, because he's saying to me it's the best question, I think. Marek. And as a former professor of Padua, I give him the floor.
Certainly a pleasure to be here, as always. I have just one question, clarification. All the example that you're giving are front desk office. It's all on the asset side. Are you design product for customer on an Islamic side, risk profit sharing? My question was on the liability side, on the funding side, are there institutions who actually only accept, in order to be current to their customer, or to what they say to the customer, that make sure that they get only funded through risk-sharing tools? And if so, do they find positive response from the investor side, as we know that most of what the MIVs are doing are still on the debt side and not so much on the equity, which would be closer to risk-sharing agreement?
And that, sorry, David, then I would like to add to this one something from our side, talking about funding. Last month we launched our BRS microfinance scope, so it's a cooperative investment organization. Just a question, it's cooperative, looking to the words of Fadwa. We hope to succeed together, but people are also exposed to risk. It's a cooperative organization. Can we promote this here as Sharia compliant in Belgium, you think?
Please go ahead.
You need a Sharia board.
You need a Sharia board for this, obviously. We can put you in touch
Let's do it together.
Very respectable Islamic scholars that are more than happy to look at your structure and the financial structuring of the cooperative. I think that's very, very interesting. But obviously, the issue of the investment side of things is, of course, critical. one of the areas, of course, that, because we do talk as if we can compare ourselves, if you like, as if we can compare the conventional with the Islamic microfinance industry. The Islamic microfinance industry is very young, so it doesn't have the kind of investment structures as yet. Obviously, if it were to develop them, very clearly it would have to develop them also, because it's not just, as you said, the asset side of things, but also the liability side of things. So it would have to also develop them in line with those principles. So investors would have to primarily work on equity. Okay, I bank, for example, with an Islamic bank in the UK, and I have a mudaraba deposit account. So the bank has an expected profit, which is basically their track record. And they might meet it every month or every quarter, and they might not meet it. So that's really something, and I have to bear also, of course, the potential loss. The good thing there in this case is that we don't have a full Islamic economy in the UK, so I'm protected by the UK government's deposit protection scheme. Okay, so that's the benefits, the best of both worlds, if you like. But obviously, in an ideal scenario, you would have an Islamic financial institution that has, of course, works on Islamic principles on the asset side, and of course also on the liability side.
But this is on the best scenario, because the reality of the ground shows something a little bit different for the time being. And it's one of the challenges, and I think an important discussion to have with the Islamic Bank, because we talk about 3 trillion assets. So obviously there is a lot of liquidity, and they should be also the ones supporting the Islamic microfinance industry. I remember it was one Islamic microfinance bank in Yemen, and one of the lender, the commercial lender, one of a competitor, was investing in this institution. So they had to make a totally different instrument through the mudaraba in order to finance this microfinance institution. And a lot of the funding in those microfinance institutions come from zakat, donor, charity, and so on for the moment. Is one of the challenges why the microfinance institution, Islamic microfinance sector didn't scale up, because you need to have more liquidity. But it's like, Grameen Bank in the old days. No one wanted to invest in those institutions unless you have success stories, you will have investors, and obviously you have the Islamic finance or Islamic development bank. You have many actors that could support. And even us as an impact investor, we think about maybe equity partnership. There is many ways to enter in support such an industry.
Fadwa, Mohamed, thank you very much for your contribution. I think it's time to conclude.
So, ladies and gentlemen, I first would like to thank both panelists and the moderator for an interesting and eye-opening discussion, I think. Nothing is like it looks like. I think that this summarizes perfect what we have seen this morning. Perhaps you might have been a little bit puzzled because it's not that obvious, conventional, non-conventional, cooperative, Islamic. There is a saying that not the journey is important, that not the destination is important, sorry, but the journey. But I think that in microfinance it's the opposite. It's not the journey that is important, it's the destination, because either you do it cooperative, you do it Islamic, or you do it whatever way, the essence is that you try to alleviate the poverty in the world and to improve the lives of poor people. And I think the values that are there, cooperation, solidarity, respect for the individual, or universal values, they can be used in Islamic world, in Christian world, in cooperative world. I think it's food for thought around the Christmas tree. I hope to see you back next year for the microfinance lunch break, and I invite you now for the reception and the lunch where the people are available. When you have still questions, you can ask them. And for the coming days, Merry Christmas and Happy New Year. Thank you.